The crypto markets have gone down exceptionally. I'm going to show you why they're going to go up with all the data you need to know to learn about interest rates and M2 money supply. Let's dive in. So firstly, stonks and crypto, they follow basically each other. The top 8 American companies by market cap, if we have a look at their all-time highs in December, they could have been higher at early stages, but just in December, compared to what the current price is on the 10th of March, you can see massive drops. Tesla's down 47%, which is pretty crazy. But we've still got like Google, the goats, Nvidia, the AI goats, and all the major stocks are being slaughtered. If we have a look at how much money has come out of the S&P 500, the NASDAQ, it's down, 10, 12% for these major markets. Over $1 trillion just wiped out. Now, the thing is, does the US government actually want a recession? We're going to go through this letter very quickly, and that will kind of help see what the grand picture is. And we can try and get an idea of when will crypto start to rebound based on this information. I think everyone knows that there's a massive amount of debt in the system. The reason why asset prices go higher is because it's a debt-based system, right? This is why Bitcoin exists. And if we have a look here, we can see $9.2 trillion of US debt will either mature or need to be refinanced. So, I mean, we don't even know like exactly who are they paying this to. It's an agreement between the Federal Reserve and the US Treasury, and it's all very complicated. It's conspiracy theories that there is a private owner of the debt or whatnot. The TLDR is the debt needs to come down. Otherwise, the trust goes throughout the system, and in 10 years' time or less than 10 years' time, the US is bankrupt. And we're referring to the fact that you won't be able to get a social security check. There'll be no unemployment or things like that. If you've worked your whole life and you have a pension, it's gone. It's been absorbed by the government. That's a really risky thing. So over the last 2 months, the 10-year note yield has fallen 60 basis points. Just pointing out what a basis point is here. It's like 100 basis points is 1%. It's just a term used in financial markets. So 0.6%. Now, we won't go over everything in detail, but everything will be linked below if you want to do your own research, which I do encourage. But why would a recession guarantee lower rates? So when the interest rate goes too high, then you have a recession, you kind of tighten things so it's harder, and interest rates have to drop in order to stimulate the actual economy. We're not on schedule, per my belief, of the 18-year property cycle for an actual proper, bear, brutal market. But we could have a brief recession where there's some economic downturn, which we'll go over shortly. So when economic growth stalls, the Fed stimulates the economy. This means lowering interest rates to lower the cost of capital and promote spending. We'll use as an example what happened in the COVID time a little bit later on. Now, since the trade war began, which is, January, economic growth forecasts in the US have created, oil prices have also created to a fresh 6-month low. And President Trump has said multiple times he wants lower oil prices for lower inflation. Basically, Trump's solution to the Fed's 3-year plus battle against inflation is get lower oil prices. And the quickest way to do this is a recession which reduces demand. He says in this little clip here, interest rates are going down, and I'd love to see energy go down. That is what will start to kind of reset the market in the brief time. In the brief period, US consumers believe inflation will rise to 6%, over 6% over the next 12 months, the highest since May 2023. If that happens, then the majority of people in the US living paycheck to paycheck, they just get wiped out. So it's a bit of a reset. And of course, tariffs come into it. Tariffs are probably, in my opinion, an idea to make the US stronger by bringing all these companies back to the US to employ people in the US. It just has a brief period where it actually kind of takes off. Like it needs one company to start, and then another company, and then you have to have buildings produced, manufactured, and new warehouses and new jobs, and then it starts to come in. Some things, like in the chip industry, it takes 4 years, but all this is starting to actually take place. So The Atlanta Fed reduced their Q1 2025 GDP growth estimate to as low as minus 2.8% last week. As a result, we saw interest rate cut expectations move up sharply last week. Was it all intentional? Quite possibly, yes. Trump in this clip here says, I hate to predict things like that when expecting a recession. There is a period of transition because what we're doing is very big. Now, Trump, in January, he said, I want the Federal Reserve to cut rates. And Jerome Powell said no, because that's just going to push up inflation. And he also said, interest rates are going down, and I'd love to see energy go down. So it is being manufactured. Jerome Powell, the Federal Reserve chair, said, Trump's comments won't affect interest rate decisions by the Fed. In other words, the data needs to suggest interest rates go down. That's what's being created now. Pomp says Trump told Jerome Powell to cut interest rates. Powell didn't do it. Now Trump is trying to force Powell to cut interest rates by crashing asset prices. We will see who blinks first. Yeah. Now, the big thing is there's only a couple times a year when interest rates can be actually reduced. And for the 19th of March 2025 Fed meeting, the probability of an interest rate cut is very, very low. Currently, this is where we are. Remember, this is 4.25 to 4.5% as an interest rate. And this is where 97% of the probability is going to land before, you can see 3% of it dropping very slightly. So that's not going to happen. We can have a look and see when the FOMC meetings are happening, because these are very, very pivotal, very key points, which the market uses to see what's going. They predict the market initially, and most of the time they're probably going to be right. But right now, it doesn't look like we're going to go down. But we will be going down shortly. This is what we can see, right? As a result, we saw interest rate cut expectations move up sharply last week. And this kind of gives us a bit of a view of what the probability of something is for an interest rate to actually go down. We can see right now, nothing's going to happen, right? March, 97%. However, we start to look like we could go down in May. And this could all be manufactured to push us down sooner. June, it looks like we drop down. You're looking at the blue numbers. That's a higher probability. And then we actually start to come on down. And this is a sizable jump. Not as sizable as it has been in the past, but still sizable. Wikipedia has all the information regarding historical rates since the 2008 global economic downturn. In another video, we could go before that if required. But there's a major market crash in 2007, 2008, interest rates to zero. And then they started to creep up. But you can see it was nothing for 7 years. And then they started to creep up. And this is nothing compared to the 80s and maybe even 90s, where there was interest rates of 20%. But now interest rates are lower in order to prop up these asset markets. We can see this all here now, this massive culmination of this high interest rate of 5.5% in order to curb, speculative mania and inflation. And it has to go down for this speculative mania to actually increase. Now, we don't have a whole lot of information here, but we've got enough data to make a little bit of a thesis. If we have a look at the interest rate from the Federal Reserve based on Bitcoin, and we can go back to 2014 when it was zero. 2014 is not really going to matter because very few people were involved in Bitcoin. It didn't really start to take off until the previous cycle. Even 2017, it was very speculative. But you can see, a cycle normally happens. We start to get a whole lot of crazy speculative nature in stock markets, and Bitcoin followed. This is when Trump came in initially. And then as it got too high, stonks pulled back and crypto pulled back, and it went down. And it went down all the way to zero around the COVID time. And then it started with the zero. After a bit of a reset, it came on up again. And then as it got too high, which it definitely did, then you can see it plateaued out. We had a bit of a push here, which was mostly just because Trump was pro-crypto, I believe, and the S&P 500. People just betting on him, just like taking it to all-time highs, like what he did in his previous presidency. But I think he learned some lessons because he kind of, messed up the poorer people in the previous cycle, in his previous presidential cycle. And now we're coming down. And as this starts coming down, then we start to go up. The S&P 500, you can see a similar correlation here. We won't go through it like exactly, but when periods are low interest rates or nothing, is a high incentive to borrow money and then just go and push it into your stock. In COVID times, anyone that had like revenue, they would borrow money, buy their stock as a buyback, and just push up the price of their stock. It was nutty. Now just so you can see, we've got the BTC S&P 500 correlation with the interest rates. So you can see that BTC and S&P 500, they are so well correlated that when this starts to go up, Bitcoin will start to go up. Highly, highly likely. Bitcoin's kind of been outperforming. But obviously we are interested in altcoins, and we're going to cover more on altcoins and how they all play into things in a few minutes. So Bitcoin, we've got ETH here, and we've got the Bitcoin dominance market cap and also interest rates. Interest rates we don't really need to worry about here, but it's here if you want to look at that data. You can pause the screen and have a quick look. Essentially, for an altcoin season to start, we need things to really start to beef up. And as things start to beef up, what we're looking at is the market cap, like this is a previous all-time high. It needs to start to make an all-time high and then hold that area, and that's where we start to see a movement. Now, ETH has not performed well. It started to perform okay in terms of like US dollars, but not compared to BTC. But the expectation is we come on down a little bit lower, potentially, and then we form a new all-time high, and then it kind of sits there. Sits there, and as it starts to move up, that's when we start to see an altcoin season. Of course, Bitcoin dominance does need to go up to that period, and then it needs to drop, which is what we're counting on. If we have a look at total 2, which is the total crypto market cap minus Bitcoin and stablecoins, it's the exact same thing. There's a point where the dominance drops and then altcoin season starts. And I say this because altcoin season is being predicted by many people that it's not going to happen. It's not going to happen as much as it did in the previous cycle or the previous cycle before that, because dumb money is gone and people are becoming more and more seasoned, but it will still come in, and we'll go over exactly why very, very shortly. So if we have a look just here randomly, 2021, we can see we reached this all-time high again. So we kind of reach an all-time high and we come up, we have an all-time high, and then things look safe. And that's when the money starts to flow from Bitcoin, but there's enough buy pressure to still keep that price up. And then it goes into riskier assets as big whales and traders and market makers try to make decent bank. And they do. You can have a look at AXS, Axie Infinity, previous cycle, many of them. They shouldn't have been where they went, but they were. It's going to be a little bit harder this cycle for sure, but just keep in mind that that's how it kind of works. We can also have a look at this data with Solana as well, but we don't have as much data because Solana is a newer token. The same thing happens when the Bitcoin dominance drops, Solana peaks. This didn't perform like it did with Ethereum. We had a very, very good run with Solana, probably because people are really using the blockchain. There's a whole lot of hype, pumped up, funded well, etc. S&P 500 post-election year, this is another very key thing to keep in mind, that this is what happens. This is normal. Compare 2025 to pink. This is normal. It's a little bit higher this year, but this is an average of 75 years, so it's kind of different. It's, there's a lot more speculation now in terms of percentage change. But you can have a bit of a good start, and then you can have this March period where it's down because, well, the new president, they need to go and change some things, right? It's not the same if the president doesn't have to change things. So if it's like a new president, they have to change things. Now, this is a very, very important thing to keep in mind. Bitcoin will lead the way. Bitcoin always has led the way. And if we have a look at the US dollar index, and when the US dollar loses strength, which is what Trump wants to happen right now, because it's better for exports, it's better for trade. It's better for trade to not have a super strong dollar. So as Bitcoin goes up in value, you'll see this has gone up in value because US dollar index has dropped. And then same with this cycle and last cycle. And then we're in the same period right here. I mean, you could even argue that this drop here potentially helped to fuel this rise, but we're more kind of concerned of what happens next, because 86,000 is not the top for this cycle. Now, the next segment we've got is a whole lot of data that comes from like Rollpool, Real Vision, and like I really do like his analysis. He's fantastic, really, really fantastic. And he has all of these different algorithms. We'll kind of go through them. One thing I'll quickly define is global M2. This is the money supply, the liquid money supply, cash, deposits that can be converted quickly. It's not your houses. It's not things that are not liquid. And as a global M2, which is predicted and calculated based on some, I don't know, some magicry. Like it's not like a certain fact, but it's predicted when it goes up, that's when, there's a expansion of the actual stock market and speculative markets. And when it contracts, that's when we have a recession. So there's a 10-week lead, and you can see that the Bitcoin price follows this very, very well. And we've just had a dip here. And if you had gone back before and you saw this dip, you would have probably seen, okay, this is a time to short it. And you would have been right. But now this is a 10-week lead. Now we start to move up. Bam. DXY as well, August 2026 to January 2018. Trump said the dollar is too strong. It's too strong. So this is where we are. And now what we can see is the DXY today is in the same place. If you went back to 2016, 2018, have a look at the S&P 500 Bitcoin, it boosted because the dollar got weaker. Additionally, global MT also continues to follow Trump's 2017 playbook. It's the same thing. I'm sure he would have learned some things from the previous presidency 4-year term, but he's going for the same thing here. Now, what about this? We have breakouts with global M2. So we've got a breakout here because what happens here is the global M2 comes up, it comes on down, it breaks, we have a contraction in our asset price, and then off to the races. The global M2 comes up again. Same thing happened here. It came up, it's kind of going all-time high, it comes on back down, and then it starts to kind of come up, comes down, and then off it goes. Same thing is happening right now. Like this is midway through the cycle. It's not the end of the cycle like people are calling. Not financial advice, but that's honestly my opinion. The data really does show that. Then we have ISM, which refers to like a marketing survey done in the US with all of the manufacturers to see, what's the state of the economy like in terms of like manufacturing goods and orders for new goods, all that sort of stuff. And obviously, the more your country produces, the more taxes, the more jobs, the more everything, the better it is. Like the more you can export and manufacture and produce, you're leading, you're higher GDP, blah, blah, blah. So we've got the ISM, as this goes up and comes on down, the Bitcoin price follows this as well. And right now, ISM has just kind of jumped up. If it's over 50, it's bullish, it's expansion. If it's under 50, it is not, it is bearish. And this one has a new orders, less inventories, a 3-month lead. So future orders, and you can see we're starting to come up again, meaning that Bitcoin price, can follow this. It may just take a couple of months. Now, this is where we talk about the altcoin season. So 50 is the magical point, okay? But altcoin season doesn't really kick into play until we're over 55 or until we're over 60. There needs to be euphoria in the markets. That's when people think, okay, I can go and take the speculative bet. I can go and buy this new DeFi token as opposed to just going Bitcoin and Sol. Also, the global M2 supply has a 12-week lead, which refers to Solana, which has played out very well, except for right now. And probably the reason for that is because of the massive unlock and the massive amount of grift. And it was a great shorting opportunity by the markets, by the market makers. But look, like, if it's followed all this so well, we're not going to stay down here. We'll come on up. That is my view. Now, we're always told to zoom out. When in doubt, zoom out. And the right thing is to look at data again, right now in the present, not just trying to rely on our memory. This is Bitcoin, okay? This is what's happened so far this cycle. Bitcoin's dropped 24%, 20%, 22%, 22%, 23%, 30%, and 30%. This is not new. These drops are brutal, I agree, but they're not new. They happen all the time. We just keep on forgetting. What about if we go back a previous cycle to when the prices were far, far lower, which is what we could call Solana in currently. So right here, this is a 50% drop, basically. 41, 40, 36, 34, 40, 40% drop. And if we have a look at Solana, which we should compare to, the 2017 cycle, because it's or the 2021 cycle, we need to compare it to previous cycles because it's newer. Look at this. 40% drop, 50%, 45, 44, 43, and 62% drop. So I get it. It's brutal out there. But look at the data. I'm confident that we go higher. You make your own assessment. All the links will be below. That's all. Thanks for watching. Make sure you subscribe and check out these 2 other videos over here. A whole lot more of this analysis will come out. So if you like this, let me know what you liked, what you didn't like, because this is a new style. There's more research, but I think it provides a whole lot more value.